how many iterations in the market do you need to be successful on to hit your goal? And if you don't know that answer, I'm asking that to everybody too, by the way, because you should know.
Oh, yeah.
That if you've been trading for a while and you do the same setup, and if you don't, then that's the next thing you guys should figure out. How many iterations does it take? Right?
Yep.
So do you know that?
Hold on.
The way you trade on the daily?
Okay. If I enter at 0.01, it takes, is this right? 681 wins to get to 1%.
No, but that's not your goal. Your goal is 0.33, right?
Okay. Yeah.
So
it would take about 200 or 230.
So if it takes 200, so what I'm saying here is if it takes 230, so you got to get 230 wins to hit your goal on a daily basis, right? So how many trades do you generally have on? How many layers do you generally put on, and how many trades do you have? So when I say iteration, I mean from open to close of a trade. That's one iteration. Does that make sense? And so how many iterations do you have to win on in order to accomplish your 0.33 goal?
Good question. If you set a take profit of 2, then each one is worth about 17 cents per micro lot. Each click. So if you go in 7 times as fast, it's going to be over $1 per micro lot.
Right, but it's not necessarily so. I don't want to confuse it. I'm not telling you how to get there fast. I'm telling everybody on this call that they need to know the math. What is it for you, right? And if you don't trade at 0.07s on the normal, if you trade with 0.01s, that's fine. That's completely fine. But you need to know how many iterations that you have to win in a row to hit your goal. You know, and why is that important? I'm going to ask this question for everybody, not just Doug, but why is that important to know how many times? Like we just did the math. He has to be successful at 0.01s, 230 trades. So he's got to be, his pip count in order to hit his goal has to be somewhere. If he's going for 2 pips, obviously he's got to be like 4 to 500 on positive pips in order to hit his goal, right? But why is that important to know that? Anybody?
You're not there all day.
True.
Yeah. And the price cycle.
So you don't get in too deep, and you don't get in too light and waste your valuable time.
Well, I think you said it right there, is that you don't get in too deep. You break it up into bite size, right? And so, honestly, I trade, for me personally, where if I can get 10 iterations in a row, then I hit my goal, right? Then I'm done trading. So if I can open, close, open, close, open, close 10 times in a row, I hit my goal. Now, the thing that's good about that is that the thing that's good about that and the thing that's bad about that and is that, one, I do have the confidence to fix my trades, so I can do that. If I don't have the confidence, you can't do that, because the thing that's bad about this is that you are trading a little bit heavier than 0.01s, but I have a 10 goal of iterations, right? So if I can hit them 10 times, if I win on 10 layers in a row, I'm pretty much at my goal, right? 10 to 12 layers in a row.
So right? 10 layers gets you to your goal.
Right. Exactly.
Right. Yeah.
Right. And so I count each layer as an iteration, right? Roughly, And so that, because I've traded so much, I've kind of learned that about my trading. But if I lose on 2 or 3 layers, that extends my time frame, right? But also, if I'm going for where I have to get like 50, it wins per a layer just to hit my goal, that extends your time in market. And anytime that you're in the market's going to do something that you didn't anticipate, didn't predict, or uncomfortable with them navigating. And so I like to keep my iterations as low as I possibly can, but also managing risk, right?
Mm-hmm. Right.
And so by knowing what your layer count is and your position size, all that kind of stuff helps to mitigate your risk. Right. And so that's kind of that's something that I know because I've traded so long and I trade the same way every single day. I know that for me, I'm about 10, maybe on some days 15. Now, all that really does depend on your price cycles, of course. But when I used to just trade 2 pips, take profit, I was at about 20 iterations in the market. I needed about 20 wins at 2 pips in order to hit my goal the way I trade. So to me, I mean, I'm not necessarily going back to the challenge, but to me, I think the biggest thing here, Doug, and I'm not picking on you, not talking to you, I'm talking to the group, is that if you do trade with a 0.01, ask yourself, am I trading with a 0.01 because I want multiple positions and I want to crank on 100 trades, or is it because I'm not confident? And if it's the not confident, then ask yourself, what am I not confident in? Is it fixing my trades when they go bad? Is it finding the right action points? What is it that I'm not confident in? And let's start fixing that confidence. Gotcha. Do you know what I mean? Because anytime I see somebody trade with 0.01, to me, that's a confident issue, unless you tell me, no, it's because I like to trade with 100 trades, right? But nobody likes to trade with 100 trades unless you're Sean.
I think
usually limit to 32 because that's the number that fits in that big window on the left.
My thing, David, is fixing the trade. Sometimes I fix it well, sometimes I don't.
Got it. I mean, honestly, you could probably make a blanket statement and everybody can do better at fixing their trades, right? Because honestly, if we all could fix our trades, you probably wouldn't be here. You wouldn't need the education, because that's where the hardest part is to fixing your trades. And so today was a great trading session. Just out of curiosity, anybody else hit the goal? Doug hit the goal. There was 2 goals on the table. So 2 challenges on the table, really, not goal. Challenges. Number 1 was place a trade in the opposite direction on a wick, buying or selling off the wick. And then the next one was an enhancement to that goal, was making sure that wick was on a action point, right? So buying or selling at that action point. So who hit it? I did both. Awesome. Congrats. Nick, that's awesome. Cool sharing it. You just hit me, not everybody, but maybe that was because Cool says, I think I did.
I was down 137 pips.
Robin almost hit 2%. Awesome. And so, sorry, Cliff, that was awesome.
I said I was down 137 pips, and now I'm down only 48.
Hey, so you cut a huge dent into that, right?
Yeah, I cut it.
Good job, guys. That's awesome. Debbie did it. Then Donnie did it. Robin, 0.5% now. Guys, that's awesome. That's awesome. I love it when, and it also tells me if we're getting the majority of the people hitting the challenge. Maybe this one was a little bit easier because obviously the market, it was really, really wicky. But what does it mean? What does it mean when you do get a market like this that is really, really wicky? Tons of wicks here, wicks here, wicks here, wicks here, wicks here, wicks here, wicks here. Like, you don't typically see a market that is this wicky, right? And like every single candle is having these larger wicks. So what does that tell you as a trader if you're trading in a market that has all these wicks?
Consolidation.
Maybe. I think Nick says it best, where the market is indecisive. Right? Because check this out. Like, Normally, a wick will tell you what the pressure's coming in. Normally, wicks tell you what the pressure's coming in. But guess what? Down, 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 down. Boom. Would you have expected that move right there? I don't think anybody would have expected that move unless you could look back and say, wow, this is a really wicky market, right? This is a really wicky market. And so to not get caught in a move like this is whenever you see wicks that are all over the place, you don't trust them because the market is indecisive, right? You just don't trust it. But if you get a normal market where you don't have a lot of wicks and then all of a sudden there's a big patch of wicks coming in, then you can trust that, right? So to avoid getting caught on something like this, you don't trust your wick, so you're not selling here off of this consolidation. Do you know what I mean? You don't sell. But you could have, but you don't expect these moves to happen, right? Anyways, to me, that's like the biggest takeaway of the learning objective for this market condition today. And that's why I put the challenge out there is finding opportunities inside of the wicks, right? And it's really playing the pullbacks off the wicks. And so if you're playing the pullbacks off the wicks, you would be selling on these guys and then all of a sudden buying off of that wick pressure. Let's see. Anybody else having any comments here? Yeah, you just notice the prices sitting right at that, right at parity, right? Yeah. And that's probably added to the undecisiveness, right? Because like I mentioned earlier when we opened up, is like it hits that dollar, gets smacked back down, and that's been the routine of since it dipped below the dollar since the summertime. It goes up to $1 and gets smacked back down, right? And goes up and gets smacked back down. And so if it's going to follow suit, we could see a little bit of a rundown. But eventually I do think, and I don't know if it'll happen this year, but eventually I do think we will start trading above $1 eventually, just because that's historical where we've typically been. All right. Anybody else have any takeaways on today's trading?
So how deep do most people get when they're trading on like a 10K account or demo?
Well, I was just going to comment on that. Dave, I had been trading my $10,000 account before the boot camp at 0.05. And my thought was get in, get out, get done. But then when I would get in trouble, it was easier for me to hit 5%. But then learning that I had 100 bullets, I dropped it to 0.02. And now I can really slap on the layers and gobble up pips and not really be worried about the equity.
Sure.
Because in my head, it's like, okay, if I can consistently get 500 pips a day, that's 0.5%. By the time I get up into the $25,000, $50,000 accounts, that 0.02 is going to generate more dollars. Is that wrong thinking? Is that me being scared?
No, like I said before, if you trade 0.01 or 0.02 because you want to maximize your position sizes, there's nothing wrong with that. Or not your position sizes, but your positions, right? Eliminate the word sizes, but you want to maximize your positions on the market. There's nothing wrong with that, right? So basically you've gone from trading maybe like 20 trades to now you're trading 40 to 60 and you're managing 40 to 60 trades. And there is nothing wrong with that because at the end of the day, it's still the same. Does that make sense? But you're not getting into 60 trades as fast as you're getting into 20 trades, which the 20 trades is causing you to hit those 5% days. Does that make sense? Quicker because you're still looking for layers. So generally you're not in at 60, you're probably in more like 30 to 40 trades at one time. Is that a true statement?
Well, the other thing that I adjusted after watching Sean again, and I made this comment in the boot camp of, since we've been watching you and then coming back to Sean, I haven't watched him for a while. I noticed big differences right away, and so what I've been trading with for the last 4 trading days is my first layer is 2 trades, and then it goes to 4, then it's to 6, then 12, then 24, then 48. And now all of a sudden I'm comfortable because my 48, that top layer, when that thing hits a 2 take profit, I can peel off my bottom layer and not feel scared about taking a 13 pip loss or 18 pip loss because I just booked 20 pips.
Sure.
So for me right now, I'm hanging out with you, but not really trading your same layers. If that makes sense.
I don't really care about I'm not sitting here saying you need to trade the same quantity or layers. The big point that I'm trying to make, the bigger point is that what your layer size is and you keep it the same.
Gotcha.
Whatever that is, right? Because going back to the 0.01 comment, if you're trading 0.01 and you're only putting 4 trades on per layer, then I would probably say that's a confidence issue, right? That's a confidence issue if you're trading 0.01s and only putting 4 trades on per layer, because you're not moving the needle. Does that make sense?
Right. And so right now for me, I'm looking at the pip total to try to gobble up pips and not being worried about my daily return, because for the last 2 months, I've been aiming for my daily return and I'll have 1%, down 5, like, oh crap. But so if I'm looking at pips, like, for example, today I just closed out for 511 pips. It was only 0.6% of the account, but my goal was 500 pips. And if I can do that for a while here, I think psychologically it's easier for me to shave off 20 pip losses because I just gobbled up 20 pips in a quick run with a heavier layer. Sure,
and that's fair. And I used to trade like that all the time, where I was looking at pips versus dollars, right? But to me, then you go back to going from pips to dollars, because eventually you're going to go to dollars. You will, right? When you get to the point where you're trading $50,000, $100,000, you're going to go to dollars, right? You still look at your pip total or your percentages or whatever, but it's still dollars, right? When you start getting checks, you start looking at dollars. And so for me, I'm a huge believer into trade is to practice how you play, right? And that's, when I coached basketball, I was always, we are going to practice how we play. Mm-hmm. And if you don't practice how you play, then when you get into the game, the real game, you're going to change everything up and not perform as well. Does that make sense?
Yeah. And let me say it this way. So if I was trading my 0.05, I was just getting too heavy too fast. I just kept messing up. I was getting too heavy. Mm-hmm. So all of a sudden, at the $10,000 account, I only have, my non-fixed is 1 lot.
Correct.
And so now dropping it down to 0.02, and this is kind of answers Robin's question in the chat. I'm feeling like I'm not getting in too heavy now.
Sure.
Because I could have 24 in my next layer. I know it's going to be, I'm building into and all of a sudden I don't feel like I'm too heavy because I'm 0.02, but I know that I have 50 bullets in my non-fix-it layer.
Yeah. Let me answer it this way, because I think that the market is the teacher, right? The market is the teacher, and you have no idea what the lesson is for the day until you can start to identify it. Meaning that in today's market conditions, like I think this is what we traded, pretty much this, right? Mm-hmm. In today's market conditions, you would have been absolutely fine by trading 0.05. Right? Absolutely fine by trading a 0.05. I traded a 0.10 with a couple 0.20s, and absolutely fine because you get this up and down movement. Last week, you would have been not okay doing that. Last week, the market was 20 to 30 price cycles. So you should have traded with a 0.02 and reduce your position size. And so when you open up the market, you can determine, is it a 0.05 day or is it a 0.02 day? And that is really what I was talking about all last week, is that is really determining on your price cycles, right? If your price cycles are between 5 to 10, well, you're not going to go anywhere pretty quick at 0.02. Do you know what I mean? But if your price cycles are 15 to 20, then you're going to need more bullets. So you need to trade at 0.02 here and 0.05 here and let the market decide what you're going to do. Does that make sense? I think the days that people find themselves upside down or hitting that 5% are the days when they trade heavier in a market they should have traded lighter. And so that's one of the first things that you should identify. That's why price cycles are so important, because price cycles tell you your position size. Does that make sense?
Yeah.
It's actually pretty easy and good if you make a little Excel sheet that tabulates like what you want to enter, how deep you want to get, and then it's easy to tabulate how many pips of heat you could take before it knocked you out.
Mm-hmm.
Like, for example, when Dave was asking these questions, I can tell him easily that if you enter at 0.01, it's like shooting tiny little BBs, but it means you could take 400 pips of heat before you get knocked out.
Right.
So it's like you can go through it knowing perfect confidence. Maybe another good thing to do is look and start slow and see what your worst drawdown is. See what your worst drawdown is. And if you can always keep it within 1%, that means you could easily triple it and not worry.
Well, and I kept trying to figure out how to ask this question of, I kept getting in heavy because I kept vacillating between price cycle. Let's say the price cycle was 10 to 15, but there was like 6 decision points in that price cycle. So we would have one price cycle against us, and I'd be in 24 trades at 0.05. And I'm like, holy crap, how did I get so heavy? Well, because I could not stop myself from clicking the mouse button because I thought that there was a decision point and I could gobble up 2 pips.
Mm-hmm, sure. Right. So at that point, you're a little bit over one full lot.
Right. And so either I have to, I have to sit on my hands, which at this point, because I'm an aggressive, intuitive.
Sure.
Anyway, so Dave, I'm not disagreeing with you. I know that it's a weakness. And so right now it's keeping me out of trouble by just looking at, yeah.
Right. But I would, the bigger thing is find what your weakness is and work on that.
Right. I do not get 50,000 points from you today.
That's your weakness right there.
That's my weakness.
But I love Robin's comment is that also fighting too long against what finally reveals to be a marching market is your problem, right? The best indicator of a marching market is how many price cycles it moves. And if it moves greater than 3 price cycles in any direction, that's my first indicator of a marching market without giving you at least 1 price cycle in the other direction, right? That's a marching market. The other thing, can
you add that to your checklist of things, on a Thursday trading Thursday night training is?
Sure. And the other thing too is, Robin, is what really has saved me is knowing where your light, your normal, and your light areas are. Because you tend to get a marching market outside of a break, right? You're not going to get a marching market inside of a consolidation zone. And so if it's normal trading, maybe normal trading means you trade at 0.05s and light means you trade at 0.02s, right? And so I really don't, I'm not trying to teach you guys to trade the exact same way that I trade every single day. What I'm trying to teach you guys is that if you to trade the exact same way you trade every day, you know what I mean? Whether that is my way, your way, or whatever, be consistent in your trading, because that's going to show you what you need to fix. But if you're all over the place, changing all these variables, then you'll never find out what you lack confidence in or what you need help in. Right. And just by saying, oh, I need help in fixing my trades, it's such a big blanket statement that you need to pinpoint that and drill that down. But if you trade the same way, the same lots, the same position size, the same way every single day, then you can start seeing, okay, you know what? I get in trouble when the market does this, when it crosses the high part and I have no idea, when it's an outside range, when it's that does this, and this. That's what you need to start identifying as a trader, as those points in the market are the points I need to work on and fix. Does that make sense?
Mm-hmm.
Yeah. Another thing you have to think about is when you get in full, like regardless, how much volume of lots or micro lots is that? Because as a rule of thumb, if you do one full lot on a 10K account, you can withstand about 80 pips of movement before it knocks you out.
Yeah, for sure. And I love, Pete, that text you just put in there, that today's topic is how identify what today's market condition is. Mm-hmm. I think that's just part of those 1, 2, 3s that we talk about, but we didn't really ever say, all these 1, 2, 3s helps you to identify market condition, mm-hmm. right? And then after you know what the market condition is or have an idea, how do you make the adjustments appropriate to the market conditions? Yeah. So good stuff though. I think we're over on our time. So if anybody has any last words, I'd love to hear them, or maybe not words, but if anybody has any takeaways from today's session or aha moments, that's very important. So if you have that, please share that, because I think as you share your aha moments or your takeaways, that embeds into your learning a lot better as you share them. So if anybody has any aha moments or any takeaways, please share
them. For me, it was the number of what you said was iterations. Mm-hmm. So to know, because my goal most time is to make 50 pips per day.
Got it.
So as you said that, then I can have an idea if I'm trading 0.01 or 0.02 or 0.05, I will know
how long it takes to get to that
how
point.
long it's going to take me.
Right. That's good. Thanks, Cliff, for sharing. Anybody else?
I think what you literally just stumbled into 5 minutes ago. What is today's market condition? Should we be trading 0.05s or 0.02s because of the price cycles? I think there's so much that we forget on our checklist that that's a important part.
Yeah, I should probably have like a pre-flight checklist, pre-trade checklist. That'd probably be pretty good, and then just keep adding to it as we discover things. And then everybody's like, "Well, I can never get any trades done because it takes me an hour to get through the checklist."
Patricia can help you with that pre-flight checklist.
Exactly. I was thinking the exact same thing. Anybody else have any aha moments before we wrap it up? Thanks for sharing, the guys. I appreciate it. And we will see you guys tomorrow. And if you guys do happen to have any thoughts to like what could make me a better trader during this day, like what you think the routine themes, I'm still kind of discovering that. Got some good ideas. But I'm always welcome. At the end of the day, I want this time slot to help you guys to become a better trader. And what's the best way to do that? That's my objective. That's my goal. So I'm still trying to figure that out. So thank you guys again. And we will be back again in the AM. So thanks guys.
Dave.
Thank you.
Thanks.
Bye.